Good weekend, all. Ira Epstein of Linn and Associates with your metals market wrap-up for this weekend going into Friday, and that's what we are right now, Friday the 6th of February, 2019. We're at about 2:40 p.m. Central Daylight Time. You're going to be a little lower. The silver probably finished out around 18.11. You finished off in the gold market a little bit lower than this. It's a correction day. And we've had 2 days of this where it's been big. Trade sometimes gets crowded. I'm sure you've heard that term. They use it in stocks, they use it in commodities. You get one way, you get a runaway market in a direction, and all of a sudden, in futures especially, those corrections come in and they're very nasty when they hit. But did anything really change? That's what you've got to ask yourself. Today, the algorithms took over the trade. I was watching it in silver and gold. And as Fed Chair Powell was speaking for the last time probably before the Fed meets on the 17th and 18th of September, that he gets what's called a quiet period where Fed members don't go out in public and do speeches. He was in Zurich and asked a lot of questions about inflation. He thinks the U.S. inflation is getting up now to where he wanted at 2%. He sees a strong labor market. He sees no recession on the horizon, but he admits there's large problems with foreign trade. Okay, that could create a recession too. We don't know. What we do know is this week we heard that China and the U.S. are willing to sit down and talk sometime in October. If you believe they can solve a deal, you're way ahead of the game. I don't. I think there's so many issues that all you can hope for are very minor incremental steps that'll take a long time. This is the 13th round of these talks. But when we look at a monthly chart, we've had a breakout. Now the question is, how many weeks in a row will you stay over the upper Bollinger Band? I must tell you, I don't count like I normally do on the weeklies and dailies how many in a row it's gone over. It would not surprise me that that 5 level comes in. I've just never done the study because a monthly chart's too hard to trade off of, but it gives you an idea of what the market is doing. If this market does what I think, you're going to see the Bollinger Band climb again. And it's gone from 1416 to 1466, then to 1502. It's probably going to end up here something higher than where current prices are when it reopens next month. Next month. We're only at the beginning of this month. I don't know where that's going to finish up, so you just got to wait and watch. When I come to the weekly charts, whole different world. Now we can start talking a little better turkey. First thing, the highest close that we've recently had is $15.2660, and we're off that close by $17. We haven't done anything yet major and broken through anything, and we certainly haven't gotten anywhere near that 18-week moving average of support, which is way down from here. It's another $100 an ounce down. What we did have is we had a big reversal week. We have a key reversal, outside week down. You can call it many things. You made the highest high of the move, you closed lower, and you're going to finish off in the lower part of the week. So we have some resistance we can finally talk about. Haven't had that in a long time. The pattern remains bullish with higher lows, as marked off by the swing line, and higher highs. When I put on moving averages, I'm sure I said it last week, I'm saying it again now. Last week was even further away, okay? And we're just moving up the ladder, but you're nowhere near it. What would stall this trend out potentially is taking out 1492.90, the last swing line low. Not saying it will or won't happen, hasn't done it yet. The market is moved to the right-hand side of the Bollinger Bands. When we first broke out of the sideways action, we got over it, and then we kept hanging. I don't know that we're going to go and challenge that number again anytime in the immediate future. We'd have to see this market take this week's high out. To do that, we'd have a big reversal on our hand as well. When you take out the high of an outside week down on either the week after it occurs, which was next week, or the week after that, I call that a bear trap because you're getting people to think a top is formed. And then I look for the closest of the main moving averages. They're all under the market, or the Bollinger Band. That would become the number. The odds favor we're going to go into something of a chop affair right here. When I look at slow stochastics, they have not turned down. So the momentum is still up. We're in a corrective mode. Will we take out 1492.90? That could end the pattern we've had in place for quite a while, actually since down here, when we've had the higher lows, higher highs, but it would not set up a bear pattern. You would end up with a higher high and a lower low, so that's important to understand as well. When we come over to GLD, the popular gold ETF, momentum is still up as looked at by the slow stochastic. An outside week down. This week's high will be the resistance point now on the chart. The question is, can it get down under the lower swing line? And that number now is going to be protected by the 18-week average of closes. That'll be a difficult number to take out. That's what I'm saying. I'm not saying it can't be taken out. Difficult, because I think supporters will be waiting wherever this 18-week average moves. And right now that number is moving about $1 a week, as you can see. So it's probably going to be closer to 134, something in that area. In GDX, well, you are on the verge of losing the momentum on the upside. It still has an 80 reading, but if it closes under 80, it starts pointing down, and that can lead to a bigger problem here. Right now, the key not to take out is 27.61, about $1.05 away from where you're at. The pattern is still bullish. Even if you took that out, and I'm going to repeat just like in the futures, you're not bearish. You've lost this bull thrust. So if you're a diehard gold person, you don't want to see that happen. You want to see the markets hang on. The gold-silver ratio on a weekly basis is corrected from 93 to 83, still looking on a weekly basis in favor of the silver market gaining on gold. Silver has pulled back, and as I said, it's going to finish off. This is a continuation chart, remember that, but it's now underneath the upper Bollinger Band. It takes pressure off the market. Staying over the band, you only do it 5% of the time. So now the question is that it's going to settle back under it. Is that relieve some of the correction that the market has been doing? Now remember, we just came this week from 1954, so the market is broken over $1.60. That's quite a break. It's not quite 10%, but it's about an 8% break or so in price. You'd have to take out 1682, I think, to scare the bulls off. They'll just view that you're getting back within the Bollinger Band here. I'd be watching momentum. It is still friendly. You start getting up next week, you can turn that back. Maybe by midweek, we'd have a better idea of what the weekly chart looks like. In the copper market, last week we had gotten down, finished off at 253.30. It was the first challenge of the upper Bollinger Band. What I often say, I can say it here too. The first time you hit a Bollinger Band, and it doesn't look like it here, but I can take you to other spots, it's generally where you get some resistance. Daily charts do this better than weekly charts in the explanation. But you're in a zone, you came down to a low area. Now the talks of China came alive, and the market has what we call an outside week up. It broke its downtrend. Now you can start arguing, if you look at this week's high of 263, it has a key reversal up. I said it broke its downtrend. It's not true. 264.15 is the high, 263 is this week's high. What broke was the downward momentum. You can see it where the momentum on the slow stochastics has turned up. So let's assume this market continues with that momentum for a bit. Wherever this 18-week average comes in will be a potential resistance point. Why? Because that seems to be the number that stopped it back there. If you take a look here, the market played at that 18-week average, went to the Bollinger Band, even stalled here for 2 weeks before it went back up. So I'll stay with what I know, and that would be the resistance point. Obviously, a breakthrough between the U.S. and China would be a very positive event for copper, since they use half the world's copper. You'd see what would happen. We're nowhere even near having a date yet for that meeting. In the platinum market, up and away, this was a powerful week for this market. Very, very strong. It gave back a chunk of it. You finished at 949 after getting up to 1,000.80. That's an awful lot to give up. Gave up $60 almost to that rally. Pretty strong break back. The market momentum still up. Remember, we don't look at overbought, oversold. I wouldn't be surprised that it gets back by Monday, Tuesday, that it's under the Bollinger Band. The way the math works, Bollinger Band isn't going to just turn down. It'll probably curve a little bit as it's up here, and prices on a very moderate, unchanged lower might get right under it. In the palladium market, this week's high was 1560.20, which took this out. So that corrective mode down to the 18-week average of closes occurred. You played there 3 weeks, then you got a good rally that finally carried over that number. You've ended the downtrend. I don't say that you're in an uptrend. What you have is a pattern of a higher high and a lower low. Momentum is up, bias is up. If the market pulls back, I would still look for the pros to be trying to support that 18-week moving average of closes. Last in the dollar index, we have been fighting a strong dollar as metals were rallying, and the dollar is down this week about 49 points. It's run into serious resistance at the upper Bollinger Bands. Some markets act with Bollinger Bands better than others. I find currencies, daily charts, weekly charts, really like to pay attention to them. And I describe all this in my morning subscriber video. Because if you're like me, believe me, I put out a lot of trade recommendations for my subscribers. And as I'm putting them out, they come in a lot of times from my morning videos. And if you think you're second guessing yourself, what is a guy like me doing that's looking at 40 futures markets and 5 ETFs all the time? But that's what I do. I start reading very early in the morning, and by the time I'm ready to begin my recording of the video, which is typically right after 6 a.m. Central Daylight Time, I'm going to review with you, where I'm not in that video. It's going to be my charts look just like this. I've got a headset on, and the way I'm making this video for you, and I'm covering all these markets with more studies than you're seeing here, but it's like Ira Unleashed. I'm able to say, buy here, sell there, do this, do that, because this is called a subscriber video. It's not out there in YouTube land for the whole world to see. In fact, it's not out there at all. I will tell you where to get in, where I think you get out. You'll see my good trades. You're going to see bad trades. One thing you're going to see is, I think, a lot of trade discipline. And don't get me wrong, nobody walks on water, but I think you're going to see a lot of that. The beauty is I cover the markets in a certain way each and every time. And the idea is, if you like the analysis, maybe it gives you some trade confidence. I cover the markets in this exact sequence. Now, there'll be a slide bar on the video where you just move it around, and let's assume you want to go right to interest rates or the metals. Just slide it. That name's going to pop up. Let it go. It's going to play. On the side, you're also going to see when it's on our screens here, you'll see a lexicon. You can click that, it'll take you there. And the reason is, maybe you don't want to look at soft commodities. Why do you have to, if you're just interested in the metals, first go through stock indices? You may have no interest. So the idea isn't to occupy your time and make you guess where the sections are. It's to take you right there and for you to be utilizing your time in the way you want to use it. There's so many videos I see you can't get to where you want to be. That we solved a long time ago. So it's this way each and every time. And as I said, it's 40 futures charts. It'll be 5 ETFs at a time. It's a subscriber video. I don't do it for free. I'm not getting up 4:35 in the morning to not be paid for it. On the other hand, the idea here isn't to bust the house either. So your introductory price, to see if you like it, $7.95 for the first 30 days. That's 26.5 cents a day. If you want to stay after that, you have two choices. You can go to $15 every 30 days. You can buy a 1-year subscription for $156 if you decide. You might want our bigger subscriptions, which includes this, written commentaries and the like. You'll see it all on our website. How do you get to this area? It's simple. Go to www.iraepstein.com. Under Education or Research, Ira's Morning Video or Ira's Research. You'll see it all right there. It explains everything, and that's where you sign up. You can also, if you want, click right up here. If you're watching me on YouTube, that icon, it'll take you right to that page. In the meantime, you have a great weekend. It's been a crazy week for metals traders. Let's see what next week offers. Have a good one.